Welcome back. This is the Northern Miner Podcast, the week of October 17th, and I am your host, Matthew Keevil. We are once again brought to you by our loyal sponsor, the Yukon Mining Alliance. Please do surf by yukonminingalliance.ca and check out all the exciting exploration and development activity going on in the Yukon territory. So we've got a good show for you this week. Once again, Lesley will be back with the Geology Corner. This week we're talking about sediment-hosted copper deposits, specifically referring to Robert Friedland's Ivanhoe Mines recently released a new resource update at their Kamoa project in the Democratic Republic of Congo. So Lesley will get into a little bit of the mineralizing events and scientific terminology on sediment-hosted copper. We'll talk about the Kakula discovery that Ivanhoe made, and the updated resource. And there's also our senior staff writer out of Toronto, Trish Saywell, wrote a really great article on this too. So surf by the website, hit that subscribe button. It's a great deal. You also get access to our Canadian Mines Handbook, which is a great compendium of resource projects worldwide. And then also the other fun thing I have is I hit the road this week and attended Benchmark Mineral Intelligence's sort of lithium-ion battery supply chain seminar. We talked to some electric vehicle producers and analysts, and we sit down with managing director of Benchmark, Simon Moores, and we talk lithium, we talk graphite, and we talk cobalt, and cobalt's pretty interesting. So there's a double mention of the DRC this week, because there's also a little bit of concern about supply security in terms of cobalt due to socio-political issues in the DRC. So we'll get into that with Simon Moores a little bit later. As far as timeline, we'll hit Lesley's Geology Corner first, then we'll surf over and have a chat with Simon Moores from Benchmark. And just to wrap the show up, I also have a little bit of insight. PwC, PricewaterhouseCoopers, released their junior mining report last week, and it had some interesting insights on financings, cash positions, sort of the health of the Toronto Venture Exchange. So I'll wrap the show up with a little bit of commentary on that. But first, let's just run through our macro real quick here, because we do have a jam-packed show. So I just wanted to touch base. We'll start as we do with gold. Gold last week was fairly muted. It was range bound. We saw a high midweek of about $1,263 per ounce, and then we are closed around the same level we've seen recently in the 1250s. So we closed at around $1,256 per ounce. So fairly muted moves, $10 an ounce swing, and that's about where we are at the time of recording. Silver, meanwhile, was at $17 and around 47 cents per ounce. Copper was at $2.10 per pound, while West Texas Intermediate crude oil was at $50.37 per barrel. A couple things to watch out for this week in terms of macroeconomic reporting. Canadian manufacturing sales are due out on Tuesday. The Bank of Canada is expected to announce its policy rate on Wednesday, and then retail sales and the consumer price index for Canada will be out on Friday. In terms of the BRICS, Brazil retail sales will be released on Tuesday. China industrial production, retail sales, and third quarter GDP is set for late tomorrow, so late Tuesday night, I believe. And then we have a big whack of S&P 500 company earnings coming up. Bank of America, some of the big indicator companies in the U.S. So we'll watch that. As always, that'll have impact on the Federal Open Market Committee's move towards interest rates. A lot of, as we said, gold's near a 4-month low right now. That's a lot due to some of the analyst notes mentioned to me that data showed hedge funds cutting bullish bets on gold amid a prolonged slump. The metal gold is down 4.8% this month, paring the year's advance to 18% on prospects for higher U.S. borrowing costs. And there's also a rising expectation of interest rate hikes. So that's just some stuff to watch out for this week. There's a lot of macro data coming down, so we'll have dig into that a little more deeply next week after I have some chance to crunch some of the numbers. But yeah, let's dig right into some awesome Geology Corner with Lesley. This again is covering sediment-hosted copper deposits, and we'll talk specifically about the Democratic Republic of Congo and Robert Friedland's Ivanhoe Mines. And welcome. I still haven't got the theme song. I tried. You know what I tried to do? This is the Geology Corner, by the way.
Volcanoes, Matt.
I know. I tried, and I had like sort of a rock riff, and then I tried to put like drill sounds behind it, and it sounded like a horror mansion.
Awful.
Like it was the most frightening thing I've ever heard. I'm like, we can't use this. It sounds like the entrance to a haunted house. Like I'm like, it's like, I'm like, oh god, it sounds like the beginning of a saw.
Volcanoes, just spewing volcanoes, like.
Yeah, I'll have to work on the to produce some audio for the entry to the Geology Corner.
Actually, I don't know. Just keep coming up with new random stuff. Yeah, it can be fun of it every week. It'd
just
be perfect.
do different stuff every week.
Yes.
So we are back with Lesley at the Geology Corner. And what do you have for us this week?
Well, this week, because Ivanhoe put out their maiden resource for Kakula in the DRC, I thought that I'd talk a little bit about sedimentary copper deposits.
Yeah.
Yeah.
There we go. That's and very topical. I mean, we funny enough, you later in the podcast, I have some audio with Simon Morris from Benchmark Minerals, and we talk about cobalt, which is very apropos for the DRC. Because before we get into the Geology Corner, I'll just riff a little bit. There's a bit of a constitutional crisis going on in the DRC right now, where the incumbent regime refuses to leave, as oft happens in African nations. So there's kind of a little bit of a whispering of potential, not civil, I don't want to say civil war and cause like some sort of panic or something, but like there's like some discord with the current regime and the constitution and stuff. So that was one of the things that we'll touch on a bit later in the show with Simon, and we'll talk about some specialty metals like lithium and stuff, but one of the things we'll talk about is cobalt in the DRC, but this is the Geology Corner, so we'll talk rocks. We'll get into the politics of it.
Yeah. No, there's sedimentary hosted copper deposits does contain uranium. My God, what's wrong with me? I'm still in this uranium mode. But it contains cobalt and rhenium and zinc and you name it. So, Geology Corner. Realistically, if you think that geology is boring, which some people kind of do for some crazy reason.
Not me.
Just wait until you hear about sedimentary hosted copper deposits, because they actually happen to be the dullest deposit on the planet. They really are. My case in point, of course, being is that most of them formed around 800 million-ish years ago in the Proterozoic. So this was a time in Earth's history that scientists often refer to as the boring billion, the Earth's Middle Ages, and get this, the dullest time on Earth.
I feel bad for these deposits.
I know.
It's like they just get like just totally bashed in the scientific community. It's like, you're the worst.
Well, they're basically giant blankets of copper, right? Cobalt, uranium, and they extend out as far as like you could possibly see. So most of them, like we mentioned, are in Zambia and the DRC. So I always say that, where the beautiful sunsets out there are more likely attributed to the glow cast from the red metal, bouncing off the red metal. And that, of course, everybody, is scientific facts.
Scientific facts.
Yes.
The more you know.
And the reason why these deposits are so insanely huge is because the conditions that they formed in were actually really mundane, thus the boring. And to really actually get everyone to understand where I'm coming from with all this, we got to shoot back to my favorite time on Earth, which happens to be the
Jurassic?
Archean. Archean.
I
always talk about the Archean.
Proterozoic? I don't know. There's a few of them.
I thought he was going to get it. But okay, so the Archean, guys, to me was really like the A-list party in Earth's history, okay?
It was banging.
It was like the Earth back then was just like one hot mess. And most of the world's greatest metal districts were kind of making their star performance. We're talking about billions of years ago. It was amazing. So whereas the Proterozoic that followed, it was actually just kind of like the hangover, I call it.
They're just chilling.
Because it was like, it was an eon of time when like all the pieces of the Earth's crust kind of came together into one big supercontinent called Rodinia.
Okay.
And nothing happened.
So when you're dating this, what are we talking here?
We're talking about like, I don't know, 1.1 billion years, but...
For the Archean or for the
Archean
hangover?
is like 2 billion plus.
Okay.
And then the hangover period maybe around like, I don't know, 1.5 billion to 700 million years ago.
It's a long party.
It's just so boring. So... There was Rodinia, the Earth was sitting there in this big old thing hovering around the Earth's equator, and the Earth was just there holding it together, living today for another chance of tomorrow, which is basically like every other Friday
But
or
these
Saturday morning.
very calm conditions gave birth to very large base metal deposits.
Yeah, because get this. What happened was that, so the Earth was just sitting there being all boring. And the first sign that the Earth was alive, coming out of its hangover a little bit, kind of began in the Neoproterozoic. So like around that 1 billion period. And that was when Rodinia started to like break up. And as it was breaking up, all these shallow seas were started to form, okay? And biological life began to take hold, and oxygen began to concentrate in the atmosphere, and the seas, being so shallow, right?
Yep.
We're able to evaporate a lot more.
Okay.
Now, with evaporation comes rain. With rain comes a ton of erosion.
Yeah.
Now, okay, this is the key point, erosion. Really, really important in the history of that time.
Okay.
Because with erosion, you have like these metal-rich Archean crusts, and they're eroding literally into these like, you know, shallow saline seas.
Okay. Yep. Salty.
Guys, this is like the most perfect condition for sedimentary hosted copper deposits. It's like
spreading.
The womb
Yeah.
of these deposits. So think about it. You have all these metals in these large saline brains, right? And under these vast seas, all the metals were leached out of the sediments by these oxidized saline groundwaters.
That makes sense.
Right. And so as the sedimentary layers kept building, all the sedimentary layers beneath were compacted, and that actually squeezed the metal-rich groundwater up into different horizons. Okay. Get it?
Yep.
Get it? In other scenarios,
continuous
of course,
horizons, like just big, long.
It's just like
thing.
if you had like a piece of cake and you started smushing it, all the delicious whipped cream and cherries would come out the sides, right? So that's kind of what was happening. In other scenarios, of course, these groundwaters followed currents of gravity, you know, whereby there's nearby uplift, and so the water just kind of naturally flows in different parts of the stratigraphy, or they were recirculated up higher into the crust by like cracks and fractures, faults, whatever. But whatever that drove these waters, whenever they hit a reducing sedimentary layer, like an organic rich shale, all the metals kind of dumped out and formed these blankets of sulfides. Okay. And then another blanket. And another blanket.
Yeah.
Okay. And this went on for like 250 million years. It was seriously
very
like
boring. Very
a Groundhog Day into eternity.
Well, that's kind of like, I mean, Bill Murray did kick it eventually, but it went on for a long time.
Right. So eventually, you know, here we are, the removal of greenhouse gases from all that rain that created all the erosion, blah, blah, blah. And then you had all this kick in biological life. It seriously spiraled the Earth into a massive cooling period called Snowball Earth, right?
Snowball Earth.
Yeah, around 650 million years ago, which pretty much marks the end of the Proterozoic. So in turn, Snowball Earth, right, triggered multicellular life, created Adam and Eve, and shabam, in a blink of an eye, here we are today.
Wow.
So that's kind of like the history of the world in a really quick little shot.
In relation to sediment-hosted copper deposits in the DRC.
Yeah, so some of the world's largest sediment-hosted copper deposits that we can find today happens to be Kupferschiefer in Poland, Anyak in Afghanistan, White Pine in Michigan, but of course, obviously the most concentrated district is the Zambian and Congolese copper belts in Africa, which, as you know, has been like a playground for Ivanhoe Mines. So,
and they just released their new resource, which Trish covered in the paper if anybody wants to catch that.
Yeah.
I believe there's a little analyst commentary and some goodies in there.
It's so good. Trish did such a wonderful job covering it. So Kamoa-Kakula, I mean, this deposit is just absolutely huge. The maiden resource for Kakula bumped up total indicated resources between the two deposits to 944 million tons of 2.8% copper.
Wow.
So that's 59 billion pounds of copper, and that's only seriously scratching the surface. So yeah, check out Trish's article on it. It's something really quite extraordinary. This deposit is born out of something so extraordinarily dull.
Now, linking it back to what you said about the formation of these deposits, I noticed in Ivanhoe's press releases, they often, this might just be Kamoa, but it maybe Kakula as well, these long, almost like a table, like a long,
like I said, it's like a
continuous,
sheet.
It's
like a blanket
that goes on
into the sunset.
Do you know the extent of Kakula, like the strike length on the thing?
I have no idea.
We'll have to look that up because I bet it's pretty far.
It's kilometers.
It's kilometers. Yeah,
I think it's like I think Kakula is like 15 kilometers or more from Kamoa, and then even that is like goes up.
So these super exciting deposits were born out of this like old folks home age of Earth, where like everybody was like really slowly rolling around.
And that's why they're so
geological wheelchairs.
No, I always think of it like somebody just sitting on your couch forever and eating like cheesies and getting
slowly
super fat.
expanding.
Yeah,
the worst visual ever. Yeah.
So the thing is, I always ask myself, really, and I seriously lie awake at night thinking about this, is why the heck is there so much copper in that particular region of the world in the first place, right?
Mm-hmm. Yeah.
I seen what made those basins so productive, and I looked into it.
Okay.
And apparently the basement rocks within the Congolese belts are super deformed granites. So some geologists believe that the copper may have originally came from huge porphyry systems that eroded away into the sedimentary basins.
Over the boring time. Or before the boring time?
Archean.
Okay, so during the party, this shit went down.
Yeah.
Oh, there we go.
Maybe originally. There's that buzzword again, Archean porphyries. It's like, you know, the ball just drops in the geology corner there on that one. Yeah. But anyway, so otherwise, you know, metals are usually just leached from volcanics or other rocks which happen to be slightly elevated in copper. And if you have enough time, you can easily concentrate a spectacular amount.
Huh, that's cool.
So the best way to explore for these deposits is exactly what Ivanhoe has actually done at Kamoa.
Okay.
And that is just to think differently. So instead of keeping to one specific, you know, time horizon that's known to be a perfect chemical trap for these metal-rich brines, Ivanhoe stepped outwards into other parts of the rock record and found new traps.
Okay.
Which is basically Kamoa and Kakula. So David Broughton, who's the VP of exploration for Ivanhoe Mines, and he was actually one of the main guys who found Kamoa. He came up to our project years and years ago when I was working on a sediment-hosted copper deposit in the Northwest Territories.
Oh, okay.
Yeah, and at the time, David was finishing his doctorate and he was consulting part-time for Freeport. And we were sitting on the skid of a helicopter. We were looking out into the, you know, the beautiful northern landscape when suddenly he picks up a rock, right? And he tosses it. And then he gets up, walks over to where the rock was and starts poking around. I said, David, what are you doing? And he sits back down and he says, Lesley, that's how you find a sediment-hosted copper deposit in the DRC.
You throw a rock and go over and just throw stuff.
From the helicopter.
Yeah.
And anyway, so I guess that's another way you can find them too. And that's this week's Geology Rock Corner.
And we're back. And yeah, Lesley had mentioned also, I don't know if we dug into it too much, but we've got a lot of inquiries actually coming in on email with people kind of asking questions for the Geology Corner and providing some ideas on things we can talk about. So please do. We love the interactivity of what the podcast brings. So if you have questions, you could submit them via Twitter or by email. It's lstokes@northernminer.com. Leslie's on Twitter @northerngeo. I am mkeevil @northernminer.com, and I am on Twitter @MatthewKeevil. So fire us some questions if you'd like. If you have a deposit type or an exploration story, etc., that you want us to take a look at, focus in on the Geology Corner a little bit. We love to do that. And while we're on the topic, please do surf by iTunes and give us a rating. Like us on Facebook, follow us on Twitter, and check out our YouTube channel, which is getting back in action. We're providing more video content. There's a few interviews up there from my trip to the Yukon recently. I believe one with Goldcorp and one with Attack Resources, so you can check those out. And then, yeah, let's move right into our next segment, which is I had a chance to sit down with Simon Moores, as mentioned, from Benchmark Mineral Intelligence. It's about a 10-minute chat, and we cover some cool things, including the different types of lithium products, supply-demand fundamentals. We get into graphite and talk about the 2012 graphite boom and why Simon thinks maybe there might be a chance that it swings around again, the graphite market. And then, as mentioned, we do talk cobalt and those supply-side concerns. So yeah, without further ado, let's jump right in with Simon, and I'll see you on the other side with a little bit of insight from PwC on junior markets. This is Matthew Keevil with the Northern Miner, and we're on site in downtown Vancouver with Simon Moores, CEO of Benchmark Mineral Intelligence. Thanks for joining us, Simon.
Thank you very much for having me.
So just to start off, Simon, maybe a little background on what Benchmark is and what you guys do.
Yeah, so we're a price assessment company, and we specialize in raw materials for the lithium-ion battery industry. Lithium, graphite, and we're soon getting into cobalt.
And well, those are some really topical minerals. So it's good to have you with us today. Maybe let's start with the big headliner, which is lithium. We've heard a lot about it recently. It's been coming onto the Toronto Venture Exchange, onto the TSX a lot, and we've seen companies launching products in Nevada, South America. So sort of what's launched this huge interest in lithium over, let's say, the past 2 years?
It's the price spike, really. Lithium prices have gone up 4x, 5x inside of China. Contracts are catching up outside of China. And while the lithium carbonate price has softened in the last 3 months, hydroxide continues to be strong. And it's basically because of a fundamental supply and demand mismatch in the industry that has to be solved by existing producers expanding, but also new mines coming on stream. And the lithium industry really hasn't seen that before.
And you hear the names like Tesla and some of the really flashy technologies associated with this. So what is the connection there with lithium and, let's say, the batteries and the cars, and why you think it's so exciting moving forward?
Well, the connection with Tesla is they're going to need lithium to make their cars work. Lithium-ion batteries by namesake. There's more graphite in a lithium-ion battery than lithium, but they are two critical raw materials from a volume perspective in the battery. And yeah, if Tesla are going to build all the cars they say they are, if they're going to have a gigafactory at 35 gigawatt hours, which is half of the size of the lithium-ion battery market last year, they're going to need a lot more lithium, and it's also battery-grade lithium, carbonate and hydroxide. So a key takeaway point is it's not a commodity, it's a speciality mineral, and you can't use all of the lithium mined, extracted in a battery. You've got to be a specialist processor and producer as well.
Now, you use two terms there that we run across in lithium quite a bit, but maybe our listeners aren't quite as familiar with, and that's the difference between a hydroxide and a carbonate. And a carbonate, you see the LCE, I guess, is sort of a lithium carbonate equivalent. So maybe just a little bit of color briefly on what exactly those products are.
Yeah, so the lithium term, the LCE term, is lithium carbonate equivalent. It's a nice way to calculate all the lithium chemicals produced into one common factor. And it's just a good way to understand it. But really, lithium is a chemical market. It's a fragmented market. And the top two chemicals in that sector are carbonate and hydroxide. And they're also both the chemicals that are used in batteries.
And is there sort of a different supply-demand dynamic between the two? Like, would there be more of a demand for hydroxide? And how does the pricing work?
Yeah, so there is a slightly different demand dynamic, mainly because they're all coming from the same source pretty much, but it's the processing that counts. So essentially a lot of the hydroxide is processed in China using hard rock sources, for example. So really it's not a case just where the mines are, it's where the processing plants are. And they do have their own different pricing dynamic, but they're fundamentally priced in the same way. Private contracts between buyer and seller. They're not exchange traded. It's an opaque market, and this is why Benchmark collects prices and does price assessments on a monthly basis, because we feel the market, both sides of the users and buyers, will need this going forward.
And so people who maybe trade on the Toronto Exchange or things or related exchanges might be familiar with Clayton Valley, Nevada, brines versus hard rock, and you just mentioned hard rock. So maybe a little bit of color on what the difference sort of is between, I think it's spodumene is what they call it, and versus brines.
Yeah, so brines are a liquid form of mineralization, and they're extracted in a very different way, mainly in South America, mainly in Chile and Argentina. And they are liquids that are pumped onto a surface and evaporated over a long period of time to get a mineral liquor. That's then processed, and you get lithium carbonate from that. Spodumene is different. It's more like traditional mining. You're mining that, you're crushing the rock, you're concentrating it, then you're sending it to a chemical plant to really get the same end chemical that the brines would get. Very different extraction process, very different processing, but ultimately you get pretty much the same end product.
And for investors who are maybe looking at the lithium space, say they're looking at a company and one company has a brine project and one company has a hard rock project, what sort of would you say to them about the process to getting those into production?
I would say the brine issue that the industry has is it's not a mining game, it's a chemical processing game. So that's usually the hardest jump to make from raising capital in a mining friendly jurisdiction like Toronto or Vancouver. But then to get it into production, you need to be a chemical engineer. So that's the big jump you have to make. In terms of the spodumene side of things, it's traditional mining. And really you're going to get an offtake, you're going to get a Chinese offtake, and that will solve your chemical processing.
And during your presentation earlier today, you did bring China up quite a bit in terms of what they're supplying, especially in terms of hydroxides. So why is China so important in this equation?
Because 75% of lithium-ion battery demand, new battery demand, is coming from China.
Okay.
Tesla Gigafactory is 35 gigawatt hours at the moment. It's going to be bigger, Tesla say. That's the headline that people have been holding on to, but more is happening in China. And that's the critical factor that's going to drive this raw material demand. While Tesla will be important, China will be the biggest fish in the room.
And maybe one of the things I want to touch on, our listeners are probably familiar with graphite back from 2012. I think that's when we actually met each other, was when we were covering graphite. But it's coming around again, and same with lithium. We will mention there was a bit of a lithium boom back in 2010 as well. But what's sort of the outlook on graphite right now that's making it come around again as a topic of conversation in the investment community?
Yeah, it's a really interesting one actually, because graphite, you're right, had the boom just after lithium, mainly because of a price spike anyway, for slightly different reasons. But people are becoming wise that graphite is needed, and natural graphite will be the dominant product. That's what we believe at Benchmark. That's what we see in the market. And people understand now that, all right, you might be able to mine graphite, but can you process that into a on-spec product that people like LG Chem or Hitachi Chemical will be able to buy consistently at large volumes? And these volumes are double, treble what they are today. That's the challenge for the graphite industry. I think investors know graphite is going to be needed, but the question they always try to ask is, well, will they make that chemical spec product, that spherical graphite product? That's still something the industry has to work out.
Okay. And so now it's becoming, again, like we said about many of these things, a supply-demand question really was what we're looking at. And then the last one I wanted to touch on is something that Benchmark's new to as well, and that's cobalt. And that's sort of been making headlines recently due to some socio-political problems in the Democratic Republic of Congo, which accounts for a large amount of the supply. So maybe just a little bit of a primer for our listeners on cobalt, because many people might not even be familiar with it at all.
Cobalt's an interesting one because, you look at the price on the LME, it's a cobalt metal price, but it's a cobalt chemical that's used in batteries. The dominant market in the cobalt space is the battery market. That's now 45% of demand. So you've really got, from a market perspective, a big difference between cobalt evolving from its industrial roots used in steel to actually being used in batteries and high-tech products. Now, the biggest problem is the DRC. Well, it's a problem because, not necessarily because they're not going to get future supply from there, but just because a small percentage is used, under 15% of supply is mined, from child labour and illegal mining sources. And that is a big CSR, a corporate responsibility problem for the Silicon Valley guys. And really that's going to be a driver of change in the industry. But for us, it's a case of not getting rid of Congo cobalt, DRC cobalt. It's really cleaning that industry up, making it a bit more professional, getting the big miners on board for that, and also developing new sources outside of the DRC, because the battery industry now is coming of age and it's going to need big volume.
And is there sort of, obviously, that section of Africa, you see a lot of cobalt production. Is there anywhere else in the world that's prospective that companies might start to look for future cobalt supply?
It's a really interesting one because cobalt isn't very common.
Yeah.
Not lithium is abundant, graphite is abundant, cobalt isn't. And it's always attached to usually nickel and copper deposits. But really, you got to look at the Canadians. You have to look at where those Canadian juniors are prospecting and developing. You've got to look at what's happening in Australia as well. And there's not many of them. So list the cobalt guys, pick them out, compare them, do your usual due diligence. But the question, we are now in a situation where more cobalt mines are going to be needed for various factors.
And welcome back to studio. It's always it's great to talk to Simon because he's been around that specialty metal space, especially in terms of growing renewables and electric vehicles and stuff for quite a long time. And as mentioned in the interview there, I actually met him probably back in 2012 when we were both sort of covering that original graphite rush that we saw back in the day. So he's done very well with Benchmark, and it's an interesting service. You can check out pricing on, as he said, quote unquote, more opaque markets for industrial materials that might not be so readily available through a quick internet search or anything like that. So surf over, check out Benchmark. It's always great to have Simon on the show. We'll try to get him on on again and see how the lithium, cobalt, and graphite markets are are going heading into the new year here. In the end, I just wanted to quickly bounce in for our Yukon Minute of the Week. One of the interesting things is there is a upcoming territorial election in the Yukon, so there's a few interesting little tidbits coming out in terms of the campaigning and some of the platforms. And obviously, mining is a very sort of at the forefront of what a lot of the discussions are about in terms of land use, First Nations. So one of the things that came across, I guess, early on October 17th was that the CBC ran a nice little piece on the Council of Yukon First Nations and some of the questions they had for the NDP, the Liberal, and the Yukon Party, who will be locking horns there for the upcoming election. And it's quite interesting because some of the things that the gentleman that they quoted in the article is Grand Chief Peter Johnston, and he just mentioned a few things, especially in terms of land use, and just a little bit, they want a little bit more transparency, I guess is the right word, in terms of some of the Yukon regulatory processes and things like that. And they also said they would really like to avoid court, which I think we all would. That's definitely something we're all looking to avoid. So. An interesting one, something to pay attention to up in the Yukon, because there is an election coming up. So do surf by. We'll probably do a little bit of coverage on that as it evolves as a story, possibly an editorial or something along those lines. But it's interesting. So do head over and check out some of the discussions the different parties are putting forth in the candidates for the upcoming territorial election in the Yukon, because it definitely will have some bearing on investments and mining companies, and everyone's going to have a little bit of a say. So it'll be an interesting discussion on the future sort of regulatory regimes and the approach to mining that the territory takes. So that's just an interesting one. There was check out the article. The Council of Yukon First Nations had some comments on the upcoming election. And then to wrap up here, as I mentioned earlier, last week PwC put out their junior mining sort of annual report, and they titled it "Signs of Life." So it's a little bit optimistic. And I had a chance to interview the PwC National Canadian Mining Leader, Liam Fitzgerald, and we just had a quick chat about some of the underlying trends in the TSX venture market. So specifically, this report looks at the top 100 mining companies on the venture. So that's in terms of market capitalization or market value. So it's not sort of a deep dive into some of the lower market capped companies. It's more so a look at some of the higher value companies and sort of what kind of trends they have in terms of valuation, cash position, and things like that. So what PwC found was that the market capitalization of these top 100 companies surged 138% year on year, and that's to $11.4 billion Canadian at the end of June. That's compared to just $4.8 billion last year at this time. So things have been going pretty well. And one of the things they noticed, they have a kind of a cool graph. I definitely recommend checking out the report. It's got some really interesting insights in it. But one of the things that they do is they looked at how it was broken down per stage. So development stage, exploration stage, and production stage companies. And exploration was the biggest sort of beneficiary of this quote-unquote rally. The report found that 63 exploration companies on the list jumped 154% year on year, while stock issuers focused on development stage assets enjoyed an aggregate gain of 124%, while production companies demonstrated 67% growth in market value. So it's interesting. I mean, it makes a ton of sense to me. I mean, exploration is by far shows the greatest tie to general market sentiments, and so as soon as people, they're as we say, the first to sell off and the last to come back. Right? So the rate of fluctuation would demonstrate a greater recovery due to the fact they'd simply been sold off more than some of the companies that had firmer, let's say, production stage or development stage assets. As soon as something has, let's say, a preliminary economic assessment or a pre-feasibility study, it's a heck of a lot easier to value than a piece of greenfield land where you're looking at a market cap and you're saying, well, what is that valued on? So anytime the market goes down, you see companies with demonstrable value assets sort of hold their value a bit better than a more speculative stock. So you've seen that sort of swing. So we've seen the exploration jump back quite a bit. And then the other thing that was interesting, we always talk about the availability of equity financing. So the availability of, be it bought deals, private placements, etc. Like we've heard a lot of narrative over the past, let's say 2 years, about how it's been difficult for especially smaller capitalization companies to access equity capital on the venture, and we've heard a lot of discussions on rejigging the regulatory regimes and all sorts of red tape talk and stuff like that. But what PwC found was that the ability to go to the market for funds remained steady over the past 12 months, but the participation of junior level companies increased significantly. So cash flows from financing activities rose 89% to 1.2 billion. This is amongst those top 100 mining companies on the venture exchange. They raised 763 million through equity financings and the remainder through debt. So that's about 500 million in debt. 500 million in debt. But the report does note that 4 companies essentially dominated junior financing activities, and that's Integra Gold. We know they have the Lamaque project in Quebec. They raised 61 million during the reporting period. Gold Reserve, which had a international arbitration situation resolved, raised 57 million. Kennedy Diamonds, which has the Kennedy North project near Gachuque, I believe, raised 52 million. And Rox Gold, who is located in Burkina Faso and is about to hit commercial production, or just recently has, raised 46 million. And Liam Fitzgerald, the mining leader, also noted that there is some, as companies get larger and they hit production, like say Rox Gold, there's a tendency to graduate to the full Toronto Stock Exchange and leave the venture. So that obviously has a impact on these sort of statistics. So it's just something to note. And then one of the other things he said, it's been so heavily driven by gold. Gold companies have really dominated sort of this rally. And things like the other one he mentioned, is tying back into our conversation with Simon, was that lithium has also performed quite well over the last 12 months. And so, yeah, when it comes to base metals, this is verbatim what Liam Fitzgerald told me. He says it's a bit hard to get a read on base metals because they are so supply and demand driven, and that's versus gold, which can be market sentiment driven. And he says it's really difficult to judge when the supply-demand dynamic will allow these commodity producers to have a sustainable recovery. And he said when it comes to base metals like copper, nickel, and zinc, the supply is still there, and it's providing a pressure that mutes recovery. So that's sort of some insight into the base metal situation. Hasn't been doing too well. And we, as we've said in a number of times, a lot of the temporal sort of outlooks, time-based outlooks on base metals from the banks and things like that have said, the near term's not looking so great. You can expect maybe sort of a turnaround by 2018, maybe. And then it starts to, the supply demand picture for things like copper and nickel starts to look a bit better as we move into the 2020 areas. So that's just a little bit of insight on the PwC report. Do surf by the website. I wrote that up, as well as a few more quotes with Liam Fitzgerald, PwC's Canadian national mining leader. And that's an interesting read, so do check that out. But yeah, that pretty much wraps up our show for the week. Thanks again for joining us. We do appreciate your listenership, and I will talk to you next week.